Welcome back to FinWeek Money Matters. Now, with the budget speech coming up next week, we take a look at two different aspects of what the experts expect to come out of it. Looking at the 2014 budget may impact the retirement industry, and we have Craig Aitchison of Old Mutual Corporate. He's the GM there of Customer Solutions, and also joining us to discuss whether the South African budget promotes entrepreneurship and supports business owners is Christo, Executive Director of Business Partners Limited. Gentlemen, thank you so much for making the time to join us. Christo, maybe let's start with you, and let's look at what the big overriding themes that business owners are going to be looking out for in this particular budget.
Yeah, the likelihood is great that they would expect everything and they can't get it, because I think I wouldn't like to be the Minister of Finance because all the signs are a little bit difficult for him to make big concessions. But the thing is, the company's tax for small businesses, I think there needs to be an adjustment there. Most definitely, it's the threshold is just too low. And then also the turnover tax. I think the turnover tax of $1 million is way too low. So there's things like that. Then I think small business is also waiting for that big infrastructure spend to now really take off. Implementation, please, you know. And then also I think there's maybe some relief for capital goods coming into the country whilst the rand is weak. So that we can produce more for the export market, and SMEs can capitalize on that, and there's many more.
Christos, but there's always been this criticism that small and medium-sized enterprises actually don't take as much of the benefits or the tax breaks that are given up to them. So, for example, if we look at the venture capital tax breaks that I think we saw that coming through in the last budget, there weren't very many companies that were taking advantage of this. Is this criticism fair, that small businesses are not latching at the opportunities that are available to them?
Well, if they can make it simpler, it would be wonderful. It is so complex, that piece of law. And if they can simplify it and make it more accessible to the people, then they would start to use it. But the hoops that you need to jump through to make use of that venture capital thing is really difficult.
Let's go to the retirement industry, and of course here we saw some talk of legislative changes, some of which have already started to take place in a broader strategy to reform the industry. Maybe bring us up to speed in terms of, from the last budget speech, what's happened and what should we be expecting in this one?
Thanks very much. I think the core thing that government is trying to achieve, and I think one of your previous guests spoke about it, is we've got to improve the level of long-term savings. And we've got to create a situation where if someone was fortunate enough to have work, when they retire, they're actually able to have a satisfactory level of lifestyle based on their own savings rather than depending on government. So there are a number of steps that these reforms are looking at to try and achieve that. The first one we've already seen some developments on is harmonizing the taxation of retirement funds. In other words, what's being tried to done there is saying, well, hold on, the environment's quite complicated, and if I'm someone who does want to save more, it's unnecessarily complicated. Let's just make it simple, and actually let's improve the tax advantage to most people for saving for retirement. So that's the Tax Laws Amendment Act that's coming through, and we're looking for a 2015 March date for that to come through. The second...
Before you move on, is harmonization something that's realistic and feasible given the current landscape of the retirement industry?
Yeah, I think so. I think it's actually a very welcome move, because I've said jokingly to some friends, you know, if you had an extra 100 Rand to save, you feel like you need a PhD in tax law to kind of know how to, you know, wisely save and put it in the best place. And all harmonization does is it just makes all the different kinds of retirement vehicles work the same. So I think that certainly is beneficial, and a lot of people actually find their deductions that they can claim for tax is a little bit more generous. There are some who are a little unhappy. The very high income earners might actually pay a little more tax, but I think in the dispensation of our country that's probably not a terrible solution.
When you say work the same, I mean, where do fees and how people are remunerated on a commission basis, how does that fall into it? Is that part of the...
So the things that they've made the same now is when and how you can claim tax deductions for your contributions. So government's saying, look, we want you to save. We'll even give you some tax back to do so. The difference was that a pension fund, for instance, you could get some tax back as you deducted. While with a provident fund, you couldn't really. You'd have to wait till you retired one day or withdrew from the fund to see some kind of tax benefit. And then you had an RA that had different rules again. And so if you wanted to put your money somewhere, you really needed to understand tax or had to spend a fair amount of time with an advisor to know where to put it. By making the playing field there level, now all those vehicles work the same from a tax point of view. Cost is something that is also high up on the agenda. So one of the things we are looking for in this budget speech is an indication of the direction that Treasury would like to go when it comes to making sure that the cost in the industry is fair. And certainly they've said one of the areas they want to review is the area you've mentioned, which is commissions and how advisors and financial planners are remunerated and paid. Now, we don't expect to see a lot of detail on that, but we certainly would like to see some confirmation of the direction they're taking and when they think that that kind of review is going to give us some results and outcomes.
Christo, one of my things about the budget is that we often get very excited for about 2 or 3 weeks and we say these are all these great ideas, and then it seems to disappear again until the next year. Give us some context. In the last 5 years, have there been material changes for small business owners in South Africa, and has the landscape changed sufficiently that we're actually trying to stimulate small business from a government policy perspective?
No, I don't think so. And, some would argue, especially the authorities, that a lot has been done because of small business tax and turnover tax and so on. But the thresholds are just too low. It's minute businesses and it's not stimulating. And also startups, there's very little relief for them. I would say give them a 5-year period to get onto their feet, and maybe have a turnover tax for them. But the paperwork is much less. But then lift that turnover threshold to, let's say, 20, 30 million, And they in any case not in the net at the moment. So give them a chance to settle down, and then once they've settled down, then you start to reap. And there's indirect benefits immediately for the economy also. So don't think of just the tax that you can collect from that person or that business and you're now losing it. There's actually a lot of things generated within that business, even jobs.
So just as a quick aside, enterprise development has become quite a buzzword among corporates. Are you seeing that yielding any real outcomes and sort of stimulating small business development in the country, or is it still sort of this abstract concept that people are just ballooning around?
Yeah, I think there's not enough substance, and maybe there's too many little small players running around. And I'm fairly opinionated on that. And I would say there's maybe there needs to be a fewer players and different levels. We too much scratching the surface with NGOs and so on. I think the new BEE codes is actually making it tougher and making the people think more, because supply development is becoming very important. And there's the big businesses, they are really now starting to look at what's downstream, SMEs, how can they help, and how can we put our enterprise development money into them so that they can develop as suppliers.
Consolidation.
Yes.
Great. I just want to pick up on what Christo said there, because I feel quite strongly about this as well. We have a very small tax base in South Africa that basically supports a very big economy relative to its population. What Chris is saying there is try and get people into the net. Are we actually seeing any real moves to broadening our tax base, or is it just a case of just tapping the golden goose the whole time and there's nothing left for taxpayers? Are we actually seeing policies that actually, not just from a small business but from an individual and corporate perspective, where we're encouraging savings and ultimately long-term investment?
I think for a while we've been talking a lot about it. But I do think that this wave of reforms that we're seeing now will bring about some changes. some real tangible changes. How effective they will be, time will tell. But when I look at some of the things, and I'll mention a few examples, I say, yeah, that's worth trying. So, for instance, if you look at what government can do to boost savings, there's really two pieces. One is enable people to save by enabling them to work.
Yep.
Very hard to save if you don't have work, though people do. There's studies that show people do. But obviously we need employment, so that's very important. But once you're employed, it's changing that culture we have to first save.
Yep.
And spend second. Now, there's different ways government can do that. One is they can offer incentives, and we spoke a bit about that with tax, and they're looking at further incentives. So they're looking at, for instance, a savings product, let's call it, where, so not a retirement fund, but a product where you are able to put money in and pay no tax whatsoever on the returns. So you get a tax privilege. Now that's great, but that only addresses that thin tax base, right? Which is the people who pay tax.
Exactly.
There are many people who work who don't pay tax, for whom saving is vitally important. Another thing that they're considering, though I think it's still some way off, is saying actually, if saving is so important, particularly for something like retirement, should we not actually make it compulsory?
Yes.
And there are different ways of doing that. And one way that they're looking at and exploring is saying, can't we work via employers to do that? In other words, have an approach that says, if you work, you pay tax and you save for retirement. And would that be a way to actually implement greater savings? So I think there are some good
I think
ideas
there's been
there.
a lot of success with that model in the States with the 401k retirement model.
Yes, certainly. There definitely another example is the UK. So the UK actually implemented that system. It's called auto enrollment 1 October last year. And they've now had they've added another 1 million employees into the savings pool, if we can call it. So that's very good. It also helps the industry to deliver saving solutions more cheaply, because if you have more people and those people have more money, the cost you have that you have to incur to provide savings is less relative to that. So it's a win-win game, I think, for everyone.
Christo, let me get your final comments as we wrap up the session. I mean, one part of the speech that Pravin Gordhan is going to be delivering is got to touch on the youth wage subsidy, which of course many are calling a form of tax one way or the other. Your views on that, and this likely to come, and do you think it's likely to come through in this particular budget, and the impact on business?
Yeah, it's another one that is worrying me a lot, because the best wage to pay is 2,000 rand a month, then you get 1,000 rand subsidy. That's not a wage. That's not to stimulate. The youth would rather stay home, but to work for 2,000 rand. I'm saying it with the greatest of respect. And if you between 2,000 and 4,000 rand a month, it remains 1,000 rand subsidy. If it goes over 4,000 up to 6,000, it goes down, and then it's getting less than and I think knowledge companies cannot hire people at that price. So the real intellectual people that's coming, the youth that's coming through, they won't be stimulated, and I would like that to be much higher.
So the 26th of February, that's the date that we're going to be looking out for as Minister Pravin Gordhan takes to the podium to deliver his 2014 budget speech. Thank you to our guest, Craig Aitchison of Old Mutual Corporate. He's the GM for Customer Solutions, and also who joining us at the desk was Christo, and of course Christo is the Executive Director of Business Partners Limited. Now let's move on to our viewer questions, where we give you an opportunity to send through your questions via social media, whether it be Twitter or Facebook. And the first question says, I have noticed there's quite a lot of media attention suddenly being paid to Tradehold. What are your thoughts on this share as an investment? Perhaps to you, Mark.
So Tradehold's quite interesting. It's a Christo Visa story. I think people love the idea of backing big names and putting some money into. Tradehold's been very much a passive investment on the JSE for a while now, and it's a bit of a mix and match of some local and now more offshore assets. They just bought a financial services business recently, and they've been involved with quite a lot of offshore retail. But it's not been one that you've ever kind of thought, geez, it's not like a Brait where you've said, geez, there's a great broad investment portfolio to look at. Suddenly there seems to be a bit of a ramp up in it. It's interesting, it trades on PE of about 8.5 times earnings, and that's after jumping. I think it's nearly done 20% in the last, it's done 55% in the last year, and about 20% of that happened in the last month. So there's some interest in it. You know, one of the problems with those kind of vehicles is that they tend to be quite opaque and you're not sure exactly what's underneath it. And does seem to be the trend at the moment is, do I list a business, do I buy into businesses that are run by big names and hope that they're going to give me a superior return?
Personally, would you get into this particular share?
I don't think there's enough of it. I don't find it intriguing enough at the moment. Maybe once the strategy is a bit clearer, you can have a look at it, but I wouldn't rush in. I think you've got to be very careful of these investment companies.
So not to rush in. Okay, let's look at our next question, which is, I have noticed that crowdfunding is getting a lot of attention in FinWeek and international media, but I wonder whether the South African landscape is big enough to support it. And that question to you, Jessica.
It's a great question, and I think the fact that we have a vibrant stock market is an indication that the pool of investors in South Africa is not too small to make crowdfunding a possibility. So the issue is not whether, as South Africans, we are ready for crowdfunding. I think it's more an issue of having platforms, attractive and feasible crowdfunding platforms out there that we can make use of. And to date, we have a few that are out there. We have StartMe and Thunder Fund, which has attracted quite a lot of media attention. So I think it's more a case of having the right platforms out there and people gaining confidence with these platforms, which is slowly starting to happen.
Okay, let's go into the Twitter sphere now. We have a tweet that comes from Mpho Selepe. Mpho says, what is the ideal price to start topping up on ShopRite? Mark.
See, it's a fascination with Christo Visa. I mean, look, ShopRite's come off quite a lot in the last couple of, in the last month it's come off quite sharply. I think it's done nearly 15 odd %. So, but you were talking earlier, retailers is not a pretty place to be. Between Truworths and JD Group, $100 million in bad debt, it doesn't look great. ShopRite's one benefit is it's a cash retailer. Although interestingly, the top end of the economy seems to, the woolies seem to have been far more secure than the lower end. Look, ShopRite's just been a fantastic investment for people over the last 10, 15 years. I think you can probably expect more of a pullback though.
Expect more of a pullback. And now this question says, when investing in unit trusts, if you have the money, what are the benefits of investing the required lump sum versus the monthly installments? Let's start off with the view from you, Mark, and maybe Jess, if you want to add to that.
Look, again, same story. These unit trusts are a nice product to go with. They create the habit, which was the behavioral economics side of it, of actually making investment. Low cost averaging, it's Warren Buffett's always said, just buy the index and buy it as cheaply as possible. It's a habit of paying yourself first, which I think was exactly to Craig's point earlier, was we need to have that culture of being able to save something, and unit trust is an easy way to do it. So I mean, I think there's 980 odd unit trusts in South Africa and only 400 listed companies. So this is how South Africans save. Good products. Yeah, I mean, costs have come down a lot. I know there's been a lot of criticism there.
So would you say lump sum versus monthly installment?
I go with the monthly installment just because I think it's a habit of it. I think if you go with the lump sum, you can easily say, okay, well, I put my lump sum in last month, so this month it's my drinking money. That would be me.
Which is 4 times more than what you spend on healthcare.
Exactly. So I think that's that habit of being able to, I think, put in the monthly thing. It just becomes something that where you pay yourself first and you get over
I think
it.
it's
Lump
a
sum
very
versus
personal decision. Sometimes putting in a huge lump sum is scary for people and will put them off actually going into unit trust at all, whereas taking off a smaller amount every month is somehow more accessible for a lot of people and friendlier option.